What's going on, guys? It's GBP baby. Welcome to another video. It's currently 10:30 p.m. on Monday the 9th of October, and apologies for yesterday's audio. In yesterday's video I wasn't actually in my normal recording environment, but you can see I'm back. So I'm back on my mic, and hopefully you did watch yesterday's video because you can see that price performed pretty much precisely as we outlined and exactly how we wanted to see. So if you watched yesterday's video, you'll know that I've been wanting to see a continuation to the downside for the rest of the week, and I was stating how there's a possibility that the high may get made on the Monday, which may have happened. Obviously we'll see, but I am still anticipating a continuation to the downside as I'm looking for this sell side liquidity to get ran. So I'm expecting a lot of heavy selling to be happening, and you can see we traded up, and we can see this candle wick here, you can see we rebalanced with that, so price traded into that, which is nice to see. But if we drop down to the low time frame, we can have a better look at price action and how it performed. So we'll go down to the 1 hour. You can see we gapped up, and then we traded up into this lovely fair value gap resting here. You can see price respects it accordingly. Let me just see how price respects the top of it accordingly. We trade pretty much to the 50% level, and then price breaks down, comes up and touches it one more time before aggressively running lower, and then you can see we retrace a little bit, and we're having a continuation to the downside. So tomorrow, like I said, I'm expecting a run down into this downside liquidity, and I would like to see this downside liquidity get grabbed. And yeah, you can see it's been quite an active day for a Monday as well. It's very, very active. However, ICT does state that after non-farm payroll weekends, such as last week Friday, you can expect a loss of volatility on the Monday. So that's what we're seeing here. You can see the break in market structure here. This low gets taken, we trade back into the breakout, which is this candle here. Trade back into it, consolidate, so this is all accumulation happening here, and you can see we're starting to distribute. Where they're going to want to let go of their stops, well, this swing low looks perfect. Obviously we have this low, but like I said, I do believe my bias is bearish right now, so I do want to see the sell side liquidity get traded to. It's very important to look at how price traded into the fair value gap and respected it. I did mark out this swing high. Again, I really do encourage you to go watch yesterday's video, because you'll see that I marked this out. You can see we traded into it, respected it, and then from then on we've just expanded lower. So tomorrow I will be looking for lower prices on DXY 100%. Also, if you look at the daily, you can see how heavily bearish this price action is being. I'll show you what I mean. So the fact that we trade up to this wick, and I say this wick, I'm talking about this wick here, this range is now rebalanced, as in the same way this wick here from Friday the 6th of October traded into Tuesday's wick here. I'm seeing a similar notion happen here, which is why tomorrow I'd like to see some aggressive selling pressure happening. Another thing to look at is the 50% level of this wick. You can see we never even reached that, and ICT has stated that when price fails to reach 50% level, it will likely trade to the 25% level. You can see we traded just above that, but that will show a lot of bearishness as well. So there's lots of confluence and lots of reasons why I'm anticipating these lower prices. If you've watched my backtesting videos before as well, you'll be fully aware of my understanding of price action and how we watch price navigate its way down. Another thing to take note of is that you see this order block here. This is a bearish order block. Let me just draw this out. So this is this is a bullish order block, but you can see that we traded through it on the downside now, and that shows disrespect of bullish PD arrays. So long as we continue to push lower, I'm going to be bearish and expecting this sell side liquidity to get ran, because it's completely disrespecting this bullish order block. We can also grade it, as in mark out the midpoint, and then when we drop down to the 5 minute, we can see how price acts around these levels, and you can see right here, as soon as we break through it, it touches it goodbye, and we kind of left it. You can see we traded back up to it again, and then we aggressively traded away, running down towards that sell side. So it's very important to look at things like this. Again, I keep saying this, but it's all just understanding price action and the delivery of it, and like I said, understanding where the drawn liquidity is right now. And after seeing an aggressive move like this, especially like this, we know the drawn liquidity is down here. So like I said, any kind of run up is going to be a false run on stops. For example, here we have a run up, but you can see we failed to take out this swing high. Why? Because we're bearish and because we're looking for the south side liquidity, which is resting below here. So that's just something to take into account. Let's go to GBP USD, and GBP delivered absolutely gorgeously today. Again, I'm going to put a link in this video to make sure you can go watch yesterday's video, because price done exactly as anticipated. You can see we traded down. This wick is now traded into this wick. This bearish order block is now acting as a bullish order block. And what I mean by that is that you see how we traded through it. You see how price comes down into it, respects the 50% level. Well, we do wick past it. I'll just show you now. We've just wicked past it on the Monday, but it's using it as a springboard to then push higher and run up into this buy side liquidity. So there's that to consider. Now, before I drop down to the lower time frames, I am going to quickly just show you what these are. So on the weekly, I'll start from the monthly actually. This is all in yesterday's video, guys. This is a breaker swing low, this big line here. So I am anticipating price to trade into that. And then on the weekly, we have this wonderful fair value gap right above Monday the 25th week. So I want to see price dip into that, which will give us a entry for potential selling. So let me say that again. We have this fair value gap on the weekly, but when price trades into it, I want to see if it respects the 50% level of it. So I'll mark that out now. If price continues to respect the 50% level of it, I'll then be looking for sells, and I'd want to see a run down into this south side liquidity resting below here. So that's basically the logic I'm looking for. But right now, I'm focused on us trading up into this fair value gap and seeing how far up within it we can get. So that's my focus right now. But I was just showing you my understanding of what I want to see in terms of why I want it to trade into the fair value gap and how I want it to trade in the inside of it. Whew. So now that we have that 50% level delineated, let's drop back to we'll go to the 1 hour. And again, this is all in yesterday's video. I drew out this fair value gap here. You can see our price traded down into that, respected it. We've now expanded out of that range, and you can see we're starting to continue to expand higher. And like I said, we have buy stats resting above here. All of this liquidity on the south side, beautiful fair value gap up here. And again, remember these two lines here and here are delineating that big weekly fair value gap. So this is a massive imbalance that we want to see price get delivered on the upside. If it respects that 50% level, then I'd expect aggressive selling for the rest of the week. But like I said, we'll have to see. Until then though, the bias, bullish. Why? Because our drawn liquidity is this imbalance here, fair value gap, and this swing high rests in here. So this is everything that we need to take into account when trading, and it will allow us to position our trades and feel comfortable within the positions accordingly. This here is a slight gap. I marked this out because there's actually a breaker here. We have a swing low, a high, a lower low, and then we break higher. However, you'll see that price didn't actually touch the top of the breaker. So I'm seeing this as a kind of like a breakaway gap. So I don't actually mind price not having traded down into it, but it's just something to consider again with understanding price delivery and the fact that we've created this gap in terms of price failing to touch it, to show that, you know, we are going to expand higher. But after that, I'd like to see us run down and like wipe out all of this. But again, this is all back testing. My understanding of price like that, it's just back testing. But what I'm saying is that it's nice to see a gap left like that, because that again hints to me that we are likely to see higher prices. Once we enter this fair value gap here, remember this is the weekly fair value gap, I am going to see how it treats this 50% level. If we manage to fill the fair value gap, there is potential that we may want to run higher, but obviously we'll have to be looking at dollar and, you know, have a better idea of what's going on. And obviously with all the macroeconomic events that are happening right now, it's quite risky trading environments in general. But these relative equal highs here and here, you know, there's a lot of liquidity resting up there, but where the price wants to get it or not right now is another story. If we go to the 4 hour, not 4 hour, I don't know what this is from. 1 second, guys. I thought it was the 4 hour. Anyway, there's a inversion fair value gap here. Why? Traded on the upside, so that should act as bullishly, but it failed. Downside, upside again. So if price comes back down into this and touches it, this inversion fair value gap resting here, I want to see it act as support. So tomorrow, or well, we've still got quite a lot of the day left, but in general, if price does want to come down and grab some sell stops, which it likely will in terms of manipulation, I want to see this area continue to act as support. So I'm going to mark out the 50% level of it. And I want to see price respect that for us to then use that as a springboard to continue to trade and push higher. Price doesn't have to come back down into the into this fair value gap. Like, it doesn't have to do it. However, I'm marking it out because I know that when price does come down to it, so long as this swing high isn't taken out, I want to be buying anytime it comes back below it, so that I can push into this buy side liquidity here. And like we said, we have this swing high up here as well. So you can start to see the way I'm framing my trades, framing my understanding. And I'll be interested to see whether in London tomorrow we do want to quickly touch down into this, grab out all the stops, because there's going to be people going long. They're going to want to grab that liquidity and then, like I said, release it in that massive imbalance where we need that buy side delivery to be projected. But it's all a matter of waiting and patience. But you can see we're just consolidating right now. We had a beautiful trade. Today's trade price action has been pretty cool. Traded down, consolidation. What are they doing? Accumulating, expansion, accumulating, expansion, again consolidating again. This is all market buy model. So what are we expecting after this consolidation? Another expansion, which is why I'm saying price doesn't necessarily need to come back down, because we have been accumulating here and here. So there's a possibility we might just continue to run up, but like I said, it depends on what the Asian session does. And yeah, hopefully I can get some trading done tomorrow, though I haven't traded in a while. I'll try and get some executions done for you guys, but that's just something to consider. Another thing to look at how price traded through that 4-hour fair value gap. Remember, this black box is that 4-hour inversion fair value gap. Look how price traded through it, came down, found support on it, and continued to break higher, taking out highs. You know, we're continuously breaking buy side liquidity. So we need to take that into consideration when we're buying and expecting a run, like I said, into this buy side liquidity here and into the fair value gap up there. But hopefully, like I said, depending on what London does, depending on where we are when we get to London, it's either going to come down, grab more stops, or there will be some kind of PD array on the way. There'll be some kind of PD array within the range it creates from now to London that's going to want to trade into before pushing higher. Right. So let's finally finish off with Euro. Euro also delivered just as I stated in yesterday's video, which is lovely to see. Here's the daily. You can see we traded down into this wick. You'll notice that I'm constantly calling out wicks from, like, look, this wick is like 3 days ago, but I'm still calling it out because price is referring to it the same way this wick traded to this wick and expanded higher. I'm seeing the same way this wick has traded to this wick, so I'm expecting an expansion higher. Very specifically, I want to see this buy side liquidity get tagged tomorrow. Be nice to get in on that move. We have an order block again that's been disrespected on the upside, so you can see we traded it down into this bearish order block, sorry, traded down into it, and we expanded higher, and now I'm expecting an expansion higher. I need to slow down. So let's drop down to the 1 hour. You can see price came down, traded into this imbalance, filling it beautifully, and then we traded out of it, found support, and then we had a nice big, this kind of candle. Things like this is like what I like to see. That hints to me, that shows me that we're likely going to see higher prices. Nice big expansion, taking out buy side liquidity here, breaking market structure. We do have a breaker where low, high, lower, low, break higher. So this little range here we can use as a breaker. I know it's very small, but I'm going to treat this the same way, like as a breaker. So if price comes back down into this, or wants to, which it likely will because it looks like we're creating relative equal lows, if price comes down into there, I'd like to see it find support, and then with that use it as a springboard to run into the buy side liquidity resting up here and here. These are all relative equal highs, guys, so there's reason for price to want to draw into it. There's also a nice fair value gap over here, like a lot of gaps here, like there's a lot of imbalances, and this one I do have my eyes on. I am going to quickly mark that out as a potential target for like the week, but yeah, it's quite interesting. And like I said, with everything that's going on, we do have to be a little bit more careful, but like I said, it allows volatility to be injected into the markets. But yeah, I'd like to see price come back down into that black box, which I marked out on the hourly, touch with this wick. But it'll be nice to see price come back down into that, offer an entry for a buy, and then I would then anticipate expansion for the rest of the day and run up into this buy side liquidity. But yeah, it's important to have a look at how price delivered into the fair value gaps, how we retraced, offered a beautiful buying opportunity, and where the drawn liquidity is currently. But that's going to be everything, guys. Thank you for watching. Don't forget to like, comment, and subscribe. If you haven't, again, I'm going to say this again. If you haven't watched yesterday's Sunday review, go check it out, because it makes things a lot more clear. But yeah, that's everything, guys, and I'll see you in the next one. Peace.